What's up, guys? Welcome back to another video. Today we have a special guest. It's Will. He's back. Will, how's it going, man? Good to have you on the show, and for a really special occasion, talking MyFX book links. How's it going?
It's going well. It's going well, and it's good to have a conversation on your channel this time because obviously we did the podcast a few years ago, and it's great to catch up.
It's crazy how like time just goes so quick in the world, man. I mean, that was a couple years back. We were chatting. I know you're doing your podcast, and I came on, and it was a great conversation. So it's good to have you back, and for a really good conversation today, because we're talking MyFX book links and track records and all this stuff. As you may have seen on some of my content in the past, that's a really big thing for me. I'm really, adamant about content creators and promoting the ones that do share some sort of track record results. It's really important, I think, for your audience to let them know kind of you actually do what you say you do kind of thing. And not only do you have a link, you've got a full year here, Will. So give me a little bit of information. Tell me about this trading performance, this strategy that you used, and what made you maybe want to do this in the first place?
Well, the main reason and how I initially found out about MyFX book was through your videos, because you used to do the updates on your account performance. I think it was your trend following account that you had linked.
Yes.
And I would look through and be like, if he loses, I get to see it. If he wins, I get to see it. And there's no hiding. So I wanted to do something that was public from the first trade I took right until I stopped trading the account, or maybe I will never stop trading the account.
Yeah.
I wanted it to firstly showcase that I can trade. I'm not just giving you advice and I'm losing over the year. And also I wanted to add pressure on my own trading. So I can't make any silly mistakes, because people will say, oh, well, how are you giving us advice on this if you're then not using that advice and blowing up your account in a month and basically not practicing what you preach? So this isn't my main strategy. It's one I've been developing that I want to turn into my main strategy, because I trade on the lower time frames, on the 15-minute time frame, and this strategy that I'm showing you is on the 4-hour time frame. And it was more of a strategy that I trade on a 15 but just scaled up. So the same confluences and everything, but just on a higher time frame. So obviously gives less trades and lower drawdown and less profit overall. But it's more of like a side thing that only takes a few hours per month.
Yeah, no, that's a great reason to do so. And, the public aspect of showing any sort of trading performance on a consistent basis, I also kind of love and hate the accountability factor of doing so. For any content creators in the trading space that are listening to this right now, it is a challenge. It is hard to show performance because, inevitably every trading strategy is not a straight line of results. Like, you're going to have, you can see periods of drawdown, also periods of growth. Like it's hard to do that even when no one is looking, but it's very hard when there's a lot of people who are watching along with what you're doing. But to add to what you were saying, that accountability is actually, I've found to be a really positive thing. When I know a lot of people are viewing my trading performance, inevitably that makes me kind of only really stay true to my system, because I've got to kind of account for it later. I don't still use my FX book. I have a 4-year thing on there still, but as a US trader, the brokerage that I was using, which was a CFD brokerage to track all my trades, no longer has MetaTrader 4, so it kicked me out of the MyFX book stuff, but I still just do live broker logins. Today's video is sponsored by DNA Funded. DNA Funded allows traders all over the world to trade with a prop firm that has 800 plus different assets in one single prop firm. They also offer 90+% profit share and unlimited trading days on both their 1 and 2 phase challenges. If you're ready to get funded, check out DNA Funded in the description down below, and make sure to use our promo code in the description for that extra discount. Now back to the video. video. The other thing I want to mention, Will, is, for viewers who are just trying to get a grip on trading, trying to figure this stuff out for themselves, you showing this gives a lot of confidence to people who may spend time watching your stuff. I mean, 12 months of trading performance is not easy to put up, and it's really rare to find anyone who even shares some sort of third-party track record or live broker logins, things like that actually show long-term consistency. So you mentioned this is like a trading strategy that's not your primary one. What's kind of like the general idea of this trading strategy, and is it mostly Forex? What are you trading on it mostly?
Well, the lower time frame version of the strategy is GBP USD, and just trading immediately after a break of structure at the start of London session. So if price breaks structure, breaks the previous Asian low or high, I'll get in on the retest, and that's simply it. Got fixed risk to reward, fixed stop loss size, fixed take profit size, and that's it. But this one's different because through testing, I found that just trading GBP USD, it wasn't giving me many setups over the year. And I knew that because I was only going to get a handful of setups over the year on the higher time frames, I can spend that time testing different pairs that move similar to GU. So I tested multiple different pairs, mainly USD pairs, and kind of went from there. And it's basically still a test, because the first trade I ever took live on this higher time frame strategy was on this account. So 10% in the first year for me, for a brand new style, I guess you could say, I'm relatively happy with it.
Yeah, that's fantastic. I mean, I was going to get to the percentage gain, because the interesting part about trading world is that the community around trading, there's some people, there's two types of traders. There's traders who would look at that and say, that's awful, and you should be scalping your way to $1 million in a month or whatever. And then there's the trading community that's like, hey, that is awesome, slow and steady gains, win the race in the end. And if you want to be here in 5 years, trade like Will. If you want to maybe not, be here at all, trade like a crazy lunatic trying to double their account every month. Like, there is a substantial difference to those two types of traders. And what I found, Will, and maybe you found this too with some of your audience, but in my audience, I've had comments of people who say, like, initially I disliked your content because you were so slow and steady and like boring, and trading is hard, and it sounded like pessimistic energy. And then they come back later and they're like, actually, there's some validity to this. Like, if I just take the slow and steady route, I can still be doing this in 5 years. And compound accounts does not mean compound them every week. It means compound them over the years, have some patience, learn to love the craft, improve your skills. And like you're doing here, like, build new strategies and improve them, refine them, and just trying to improve every single year. So I love this approach. I love this. I see like numbers like this, and when I see somebody send me like a result that's like, I'm up 300%, I completely write it off. In my head, I'm like, that's not like a sustainable thing that you did. But when we look at this, which has a smooth overall equity curve, you mentioned a fixed risk to reward, which is great. Your wins and losses are not too far. Like, the win percentage is not too far. However, your winners are bigger than losers. So that's like a fantastic overall trading results, and really, really cool. So you mentioned you're trading a couple currency pairs. We saw, mostly Forex here. You're trading the lower time frames. What else kind of, so you mentioned like this is not your primary trading strategy. Is this, what is your primary? Are you more swing trader? What's the other style that you use?
Well, this one is the higher time frame one.
Oh, gotcha.
And my primary is the 15-minute style.
Got it.
So this one doesn't actually have fixed risk reward. The lower time frame one does. This one I average, I think, just over 2% on a win. So it was going really, really well until January, where every trade lost, which wasn't great. So at the time, ending December, it was 15% gain with only 3% max drawdown. And I was really, really happy with that. And January was like, it wasn't a great month. But I guess that's fine. But comparing it to the lower time frame strategy, this one 50 trades, I think it's 49 trades in 12 months,
Mm-hmm.
isn't a lot. When I'm used to taking sometimes 3 or 4 a week on my lower time frame strategy. So it's almost nicer when you're in drawdown because it's not as substantial as a lower time frame strategy would be in drawdown.
Sure.
So I was able to handle it and be like, it's only 5% lost in a month. I know that in let's say 1 or 2 good months, and I can make that back and be completely fine. But I feel like most traders that get in that situation, they haven't tested their strategy enough, so they're not comfortable being in that drawdown.
No, that's really, really important too, is people bypass the whole like, oh, back testing is really important. They hear that, it like goes in one ear, goes out the other. And like, but what you just said is maybe the most powerful part of back testing, which is like, it gives you some confidence to know like what is an acceptable drawdown. And that's also something that you get just from trading experience too. Like if you trade the same system this year and then next year, on the third year, you'll have some good data behind you to say, look, this is a normal drawdown. If I'm in a 7% drawdown, this is normal. If I'm in a 30% drawdown, something is broken. But knowing your limits, it's crazy because a lot of people, like I said, they don't even do any sort of back testing or journaling in this case, right? This is like even better than back testing is trading a system, recording all the data and looking back at it. That is so powerful for understanding, like, as you go forward from here, what's normal, what's appropriate, what's okay. I mean, look at these. This is fantastic. So I love this monthly gain chart. This to me is perfect. This is what a trader should shoot for. And again, I get in trouble in my YouTube comments. People get mad at this kind of concept of just going for a couple % per month because people don't find that exciting. And it's fair, Will. People who have like $1,000 in their account, they're like, well, 2% is $23. But it's the market doesn't care about how much capital you have, and it's kind of like a painful truth of trading is you got to have capital to make it worthwhile. But 2% is an achievable number that you can repeatedly do and compound and grow accounts. I mean, this is really nice. So you had a month where you're up 1.2 and then 2.36. You had a down month about 0.9, 2.3, 2.5, 2.4, 1, 2.3, 2.7. I mean, these are great numbers. So was there anything different that you did during the drawdown periods, or would you think that that's just purely part of the system, part of the downside, part of the variance of losing periods? Is there anything that you would have changed, or do you think you pretty much stuck to the rules here?
Well, the way I was able to, over 10 months of trading, only have a 3% drawdown before the losing streak in January was there were, I think, 2 or 3 trades over the 10 months were full losing trades. So before I actually went live with the strategy, I had set rules for trade invalidations. So an average loss, as you see the losing months in 2024, the lowest month possible was 0.89% losing. And the way I did that was, if a trade went against me and invalidated the setup, I would close immediately. Even if the trade was in profit, close to my take profit, I would close immediately. And that made it so that when I'm right on a trade, I'll just let it run as long as possible, because I know you do the same with your trades when you move your stop loss. I don't like moving my stop loss, but I will get out of a trade as soon as I see an invalidation. And that's helped me minimize the drawdown overall. And let's say I lose 4 trades, that's not going to be a 4% loss on an average losing streak. That could be 2.5%, 3%. So it then means when you get a full win, that can cover 4 losses. So that's something that made the drawdown a lot easier for me, because I understood when a trade was no longer going to work.
Sure. Yeah, no, that's a great point. And again, cutting losers quickly, letting winners run is a style that I've also had good success with, especially when you catch good trends, good movements in the markets. That can be exceptional. Here's a question that I know I have an answer to, and I know audience members are going to ask it, so I'll ask it on behalf of them. So, okay, you've got these months where you're up 2%, you're up 1%, your biggest drawdown is 0.9. Many people who are newer to this stuff might just say, Will, why don't we just multiply everything by 5? Like, let's go for a 10% average month, and then we can still stomach a 5% average drawdown. What would be your response to that if someone said, why don't we just leverage it times 5?
Well, I did a video explaining this that I posted this evening, and I was saying that my overall drawdown, or the max drawdown I had over the first 12 months, was 6%. So let's say I was comfortable being in a max drawdown over a 12-month period of 10%. I would then add 0.66, for example, to each trade or each position. So I want to make sure that based on my data and based on what I know I'm comfortable with being in drawdown, I usually base it off of, because most of my trading was done on prop firms in the past few years.
Yeah.
So I'm always in the back of my head thinking 10% drawdown. So everything I do is based on a 10% drawdown. So,
I love that.
So when I'm going into testing a strategy, if it has a 15, 20, 25% drawdown, I know that I personally won't be able to trade as effectively as a strategy that has a 5 or 10% drawdown. So let's say this did end the year with a 3, 4% drawdown and a 10, 15% gain. I would have considered maybe risking 2% per trade. But because it did end with a 6% drawdown, only a 10% gain, I'm not really looking to risk 12% to only make 20% in the year.
Yeah.
That doesn't really, I mean, it's okay for a size strategy, but also that makes it worse in my opinion. Because if I'm trading another strategy, why would I increase my risk further when it's only meant to be on the side anyway? If it was my main strategy, I would be constantly looking at ways to reduce my drawdown, reduce the losing streaks. And then I guess if you reduce that, then the profit increases anyway. But that's definitely something I have considered.
Yeah, and I think that there's like a reasonable middle ground too, because if you think about this, right, if we are looking at this, and you mentioned these two numbers, that was a great answer, because you have, okay, here's my gain, here's my drawdown. Yes, hypothetically, could I get more out of this system if I ramped up the sizing? Maybe I double both, right? That's going to be a 20% gain and 12% drawdown, as you mentioned. And some people might be okay with that. But there's one thing that we have to remember with trading and trading systems, which is, of course, this is why we backtest, is because this, although this is a great period of returns, markets change over years, not necessarily over months every single month. Like there are times where you get a great 1-2 years on a strategy, but within your back testing, if you scale out 5-10 years, you're more likely to run into a more challenging environment where maybe the max drawdown in a different environment might have gotten up into 12-13%, which I would say is still perfectly reasonable. But you talk about 5xing a 13% drawdown, now we got problems, right? So I kind of think of it as like being super conservative and defensive and fixating on that drawdown is what keeps traders kind of in the game for the long term. Because again, you might say, well, what if I quadruple my risk on a 10% drawdown? I have 40% drawdown. Well, I could still come back from that, but it takes one time from there. You're getting closer to that risk of ruin. So it's almost like the concept of, you want to find that middle ground of where you're comfortable, where you can take the kind of risk that you want to take without getting out of control. And I really think that focusing on drawdown like you have here over returns even is the most important thing. So that's really, really smart, because again, you're focusing on what could go wrong. And if I get that out of the way and I have a good kind of expectation there, then the returns should just sort of come over time. So really, really cool stuff there. Again, drawdown, like the most important thing. And so what about this last period here, would you say contributed to the losing streak? Again, is it anything breaking the rules or system, or is it just pure variance of the strategy?
I did everything exactly as I did for the initial 10 months.
Yep.
But what I should have done, and this is something that looking back, it's easier to say in hindsight.
Sure.
But I should have noticed the conditions weren't exactly as I should be trading. So this strategy works best in a trend. So I'm looking for a break, price retest back, and it follows the trend. Because there was so much consolidation, especially around the Christmas period and into New Year's, I was trying to enter trades at the start of January, and there weren't really trending markets based on how I like to enter trades. So I was getting into trades, it would then hit my stop loss, then go exactly to my take profit, then it would come back to the entry. It'd be like, I shouldn't be trading this. So I need to put something in place that is adjusted for the market condition.
Right.
And obviously I wouldn't know that without going through that experience, especially trading when there's obviously going to be a new president. I obviously traded through that once, but it's not really something that you can back test very frequently.
That's a great point. And that's a challenge I think a lot of people who are listening to this probably have faced with recent changes in and this is not something new. I mean, this happens. You get paradigm shifts in markets, like when Russia invaded Ukraine, or when COVID-19 happened, or Trump 1.0, Biden, Trump 2.0. Like, you get all these market forces that change, and I think that's part of the reason why markets are so difficult, is there's some level of unpredictableness to all of it that is sort of inevitable. Doesn't mean that you can't make money trading. It just means that is going to be a challenge for everyone to sort through. But yeah, no, I mean, again, what I loved there that you said is you stuck to the same system here that produced these results. Because I'm asking you these questions, Will, because I get these questions all the time. Like, you know, you get them, I get them. That drives me crazy is when people say, well, Will, what went wrong here? And it's like, nothing necessarily has to go wrong. It's just part of the same system over here. There's nothing that works all the time. So even if you stuck to the exact same rule set and strategy, market conditions changing are not something that you can control. You can only control your strategy and your positioning sizing. So that's a great answer. Again, maybe you could add some filters, maybe you could look into some things, but for the most part, I would say this is exceptional results on healthy drawdown. And I just wanted to congratulate you, because that is really impressive and really awesome. And I hope to see more of it in the trading community, and you're setting a good trend here.
I appreciate it, especially coming from someone to inspire me to start it in the first place as well.
Well, it's great to have this conversation with you, Will. And again, I want to wish you the best with everything. Thank you for coming on. And everybody who would like to find Will, what's the best place for them to connect with you? I see you on Twitter. I see you on YouTube. What's your best place to find you?
There's Will's FX on YouTube and Twitter. And
Perfect.
You can probably find everything there.
Awesome. Will, thank you very much. And we will see you on the next one.
Perfect. Thank you.
Hey traders, I wanted to let you know that if you're not already in our Telegram channel, it is completely free to join, and we just started a new series in the Telegram channel. It is our Chart of the Day series. We're dropping regular videos, extra bonus clips from my analysis into the Telegram channel. Like, for example, we just did a Chart of the Day, US oil. If you're not already in the Telegram, completely free to join. There's a link in the description. Make sure to join us for more free content there.